My name is Aman CHugh, and in case you wish to visit my detailed profile, you could visit www.amanchugca.com, which is amanchugca.com. Today, standing on 1st February 2018, which is ideally India's budget day today, but I thought before the budget comes into line, I should speak on something which just passed by in the last week. Well, I am here to speak about particularly the reaction of the currency market and the bond market after what US had to speak on Davos conference. Trump's speech on Davos was quite constructive, wherein he was expressing his concern that the earlier treaties between US and the other counterparty nations were less favorable to US and were more favorable to the other counterparty nations to the treaties. So he wanted to revise those treaties, and he has expressed his concern that such treaties should be revised so that America's interest should also be taken into consideration. And hence, for him, he reiterated that America first does not mean to take care of only American interest, but he expressed more concern that America's interest should also be taken into consideration economic wise, because the earlier treaties, America's interests were less favored to and were more favorable to the other counterparty nations. Hence, I would rather put it this way, that Trump's speech recently at Davos summit was ideally more constructive. Having said about Trump's speech at Davos, ideally we should also look at that US markets are at a lifetime high, which means S&P 500 is already touching around 2900 levels, which is an all-time high. In fact, some of the market analysts of the world had predicted that this level of 2800 to 2900 levels would be witnessed by year end. However, such levels have already been witnessed within the first month of such year. That means within the first month of this year, the markets has risen by almost 10%. So S&P 500 was around 2600 levels by start of January 2018, and by end of January 2018 it is already touching around 2800 to 2900 levels, which was ideally its target for the year end. Hence, quite a lot many analysts in the world are quite worried about the fact. In fact, markets are also worried that so much of movement in the first month of the calendar year ideally is raising more suspicion as to whether it should not be a bubble. In fact, a lot many participants, market traders, are also worried about their existing long positions, and they feel whether they should go ahead with their existing long positions, and also new investors or new traders are worried as to whether they should enter into such long positions at this moment or not. On bonds front, ideally the credit spreads between the junk bonds and the investment grade bonds is ideally reducing, which is ideally because the market is on risk on mode, which means that the market is willing to take that risk. So when the market is willing to take that risk, the credit spreads between the investment grade bonds, which is ideally of high quality bonds, and the junk bonds, which is ideally of low grade quality bonds, the credit spreads reduces, and hence the credit spreads are reducing between these two types of bonds, which signifies that market is willing to take that risk as of now. On US treasuries front, the 2-year treasuries and the 5-year treasuries supply is more than what its demand is, which is leading to the rise in the yields. In a simple language, ideally if there is more bonds to supply and there is less demand for such bonds, so ideally the bond value will fall, because there is no one who is wanting to demand, and there are many participants who are wanting to supply. Hence the bond values goes down, and since the bond values goes down, the yield rises, because the persons who are not willing to demand such bonds, they are wanting to have higher yields in order to invest in such bonds, which we can see that as of now the US treasuries, 2-year and 5-year treasuries, are ideally having excess of supply than the demand, which is leading to the rise in the yield of the bonds. And market is quite worried that why is this yield rising, but just a clarification, this yield is rising because of the oversupply of US 2-year and 5-year treasuries rather than the inflation in US, which means since this yield is rising not because of the inflation, but is rising because of the oversupply of the bonds, the dollar is not appreciating. So dollar has been depreciating against all the major currencies, means that dollar value is coming down as against the other currencies. Just to give you a figure, DXY, which is dollar index against a basket of currencies, has breached a 20-month low of 90 levels. And breaching of 20-month low of 90 levels means that dollar has been depreciating against the major currencies of euro, pound, yen, etc. And I expect that further 3 to 4% of depreciation is still on cards for dollar to depreciate further. Dollar depreciation is ideally bad for US in the sense that if US has to import and dollar depreciates, this means that its import would get more expensive, and US has got a trade deficit, which means it has got more imports as well. So that means more imports getting expensive would lead to inflationary pressure in US. And we all know, we have already discussed, while in some of the seminars which I have already addressed, that if the inflation goes up, that would lead to the Federal Reserve to raise its interest rates. Also on the other front, if dollar is depreciating, that would mean that exports become cheaper across world for US. And that means if exports become cheaper for US, that means that US will have more production capabilities and production enhancements within its economy, which means rise in production. Rise in production means rise in the GDP of US, and rise in the GDP of US, we already have discussed in quite many forums together that if the rise in the inflation is more than the rise in the GDP, that would also lead to the raise in the interest rates. Hence, which is why the market is already discounting that there shall be at least 2 rate hikes in this calendar year, which is 2018, January till December 2018. In fact, now just a further information, Miss Janet Yellen, who was the Federal Reserve chairperson, has been replaced by Mr. Powell, who has been brought by Trump. And so ideally now the Powell is the chairperson of FOMC, who has replaced the chairperson of FOMC earlier, who was Miss Janet Yellen. So while dollar has been depreciating against quite other currencies, just to give you a figure, euro has moved from a level of around 105 during the European crisis. It was 1.05, so 1 euro versus dollar was 1.05. It has been now touching to a level of around 1.24, 1.25 levels. Although it could further appreciate, euro could further appreciate against dollar, but Draghi does not want euro to get appreciated further because European economy is majorly an export oriented economy, and if euro appreciates against dollar, that would hit its exports. Similarly, on pound front, while because of the Brexit challenge, the pound had fell to almost a level of 1.18 and everyone believed that Brexit will be probably a hard Brexit, but then everyone believed later that UK is not that type of a nation which you could ignore, and hence there was no hard Brexit, there was more of a soft Brexit, and the trade negotiations were renegotiated. Since the trade negotiations were renegotiated and they could not ignore UK's interest, so that's why the pound has also been appreciating and has appreciated back from 1.18 levels to almost a 1.45 levels now. Japanese yen was hovering at around 80 levels, but because of the extensive quantitative easing, which you would have seen in my video number 1, because of the extensive quantitative easing in the world, including Japan, because of extensive quantitative easing, the Japanese yen depreciated from 80 levels to almost 118. So that means $1 was equal to 80 yens and moved to $1 is equal to 118 yens. That means the yen depreciated by so much. But of late they have realized that with plenty of QEs being done in Japanese economy, it has not helped them to increase their inflation rates, because of which they want to stop down or halt down their QEs, which has led to the rise in the yields of the Japanese bonds. So rising in the yields of the Japanese bonds has led to the appreciation in yen, and I expect further that yen should be touching a level of around 105 from a current level of almost 109, 110. Hence, overall in the world economy, most of the currencies are majorly appreciating against dollar, including rupee as well, and particularly on dollar rupee, particularly on emerging markets as well. Although dollar rupee and Indonesian rupee. So ideally Indian rupee and Indonesian rupee have less appreciated as against the other emerging market economies currencies against dollar. But point is that US dollar is depreciating against most of the currencies of the world, and if this continues further, ultimately that would lead to more of challenge for US on import side, which will lead to the inflationary pressure in US, which will lead to the increase in the interest rate in US, and which ultimately means that if US has to raise the interest rates because of the interest rate differential challenge, the other economies will have to also raise their interest rates, which is true for including India, as you would have seen by recent statement by Mr. Arvind that we have already passed through a phase of around 18 months wherein the further interest rates could have fallen. But however, now he also feels that interest rates falling regime is over, and he also expects that the interest rates to rise in the near future. So in my opinion, let's see how is US going to behave with their interest rates, because if US increases their interest rate, India will have to also raise their interest rates. And while the inflationary trends in India is also picking up momentum, that means if the inflation exceeds or is expected to exceed the GDP growth rate, we should see an early interest rate rise as well. So I'll be recording further videos as well for you to see. I hope you are liking the videos, and if you are, and if you have not yet subscribed my channel, I would request you to subscribe the channel so that the further videos also reach to you automatically. And I would also request you to further share these videos if you feel that these are beneficial for the common community to understand as to what is happening across the world. So till then, thank you very, very much.